What's going on, guys? We've got a bit of news to talk about today. First off, we're going to look at Metaplanet and their recent Bitcoin purchase. They're basically a Japanese MicroStrategy, if you didn't know. We also have the FOMC minutes today, and then we have some important upcoming economic data to be aware of. But first, Metaplanet adds another $451 million worth of Bitcoin in Q4, and they increased their stash now to 35,102 Bitcoin, moving towards their 2027 goal of having 210,000 Bitcoin. Their Bitcoin bag is now worth about $3 billion. And currently they're at an unrealized loss with their Bitcoin holdings. And just like Strategy, Metaplanet's market to net asset value is very close to 1. It is hardly at a premium currently. Usually these are the times you want to acquire companies like this, not when they're trading at massive multiples or massive premiums to their Bitcoin holdings. Speaking of accumulation, Bitcoin whales continue to dominate accumulation near 80,000 as retail capitulates, while the everyday investor continues to sell amid this pullback, worried that things will go lower. Bitcoin whales, which are folks holding 1,000 Bitcoin or more, have been the dominant accumulators since Bitcoin has bottomed near 80,000 in late November. And currently this is the only group displaying a net accumulation rather than disbursement, with their accumulation trend score approaching 1, which is the highest possible rating. And it basically tells us if they're accumulating or distributing. While these whales continue to accumulate, those holding fewer than 1,000 Bitcoin continue to sell. What we're seeing currently is consistent with capitulation behavior. And while the crypto fear and greed index isn't at lows, it has still remained in the fear level for roughly a month or more. While the retail investors are selling out of fear, giving up on Bitcoin. While this is happening, the more sophisticated market participants, those that have bigger money, those that understand the game, they continue to accumulate. And looking at the whales holding 10,000 Bitcoin or more, their accumulation has slowed recently, but not shifted to net selling. But they were aggressively buying when Bitcoin first got into the 80,000s in November. And this difference basically between price sentiment and accumulation trends usually mark late stage corrections rather than the start of a prolonged bear market. And this is the thing, you'll have conflicting data. If you look at Bitcoin's typical cycles, we should be entering a bear market. This should last right around a year. We should be getting out of it at some time towards the end of 2026. Looking at data like this indicates that this is just a correction. I think in the end, what is important is accumulation while things are down, while there is fear, because we don't know how low things will go. Maybe in this bear market, we get down to the 40,000s. Maybe we only get down to the 60,000s. Maybe the bottom's in on that death cross. No one really knows for sure. That's why you want to accumulate Bitcoin while it's down and out, while sentiment is bad. We also have the FOMC minutes today, and they're going to be released at 2 o'clock today Eastern time, basically going into more detail about what happened in the last Fed meeting. But I'll leave this down below for you. I really wanted to focus on this one indicator that's kind of interesting. This is called the supertrend indicator, and it turned red in November. The last time that this occurred was in January 2022, declining from 52,000 to 15,000 after that. And interestingly, going over to this supertrend indicator that is on TradingView, there are different ones, but this is one of them, and it did say sell for the first time since going all the way back to January of 2022, and this is a pretty accurate indicator. Not perfect. For example, with this sell indicator, you would have been really quick to get back in. But when you go to like the weekly, when you go to larger term timeframes, this can be a very accurate indicator. I mean, going to the daily, this is definitely a little too noisy for my liking. But you can see on something like the weekly, it has tended to be very accurate. And this is going back 2 entire cycles. This is the 2017 peak, telling us basically it's time to sell after it's already dropped pretty considerably, but basically telling you the trend. And this indicator is for the first time saying sell since the last bear market in 2022. I am always overall net bullish on Bitcoin. I believe in the future of Bitcoin. I believe in the long term of Bitcoin, but I also still believe in Bitcoin's 4-year cycle. It has the halving, which usually you see a bull run leading up to it and a little bit after. And then towards the midpoint, in between these halvings, you typically have a bear market where things get to reset. We get some fantastic prices on Bitcoin. And like I've showed you guys many times before, this is one of the most prime indicators in my opinion telling us if we're in a bear market or not. This is the 50 MA on the weekly, and every time we do get it as a resistance, we find it as a resistance before we go lower. We at least back test it once we break it. This is the last cycle and this is the prior one before that. We have broke under our 50 MA on the weekly. Now it's a matter of coming up, testing it at about 102,000 before we either find it as resistance or for the first time in any bear market, break over it and continue on with our bull market. Now, what would I like the most as an indicator of when to buy? Do I use the EMAs? Do I use the moving averages? Noticing I'm still on the 50 and 200 MA. On the weekly, you'll notice that if you just buy when it's under the 50 MA, yeah, you're not buying tops, but you're not getting the most fantastic price you can. And if you only buy when under the 200 MA, last cycle you would have had a great, multiple months to buy, very low from the like 20,000s to 15,000. Last cycle you would have never had a chance to buy besides 2020. We all know what happened there, which was basically an anomaly. And in the cycle before that, we were hardly under the 200 MA. So I wouldn't just rely on getting under the 200 MA, which is under 50 something thousand. I think you should be accumulating Bitcoin higher than the 50,000s. I would much rather use the EMAs for this accumulation phase, the 200 EMA. You'll see that the cycle before we did have multiple months to be able to accumulate from 26,000 as low as the bear market lows back to 26,000. Fantastic chance to accumulate very low. You were able to just buy for multiple months. Not a huge extended amount of time, not like a year or anything. And even going back to the last cycle, there was a time that we were under the 200 EMA, whereas we weren't under the 200 MA at all, besides 2020. So if you want to use a simple indicator, a good one that tells you basically the prime time to buy, it's not going to be like an extended amount of time either. It's going to be just a couple of months. Use the 200 EMA. This does give you great opportunities during the bear market to accumulate, whereas the 200 MA sometimes would basically not give you a chance. I think what's really important is just accumulating Bitcoin when it's down and out, accumulating when it's low, when we're in the suspected bear markets, when we're in these correction phases. But let me know what type of indicators you use to give you a sign of, is it time to buy? Is it time to sell? Do you just follow the 4-year cycle, buy during crypto winter? Or do you just DCA into Bitcoin no matter what time of the year it is and no matter what point in the cycle we're in? We also have some important economic data coming up in maybe another week and a half or so. First off, PPI, which has been elevated. We're at a 2.7% was our last read. We need to see this come down for the inflation side of the puzzle for the Fed, along with, of course, CPI, this consumer price index, and it too is somewhat elevated from where we were in like the summer. Preferably, we'd see both of these, including PCE, which typically comes out towards the end of a month. We'd preferably see these in the low 2s, giving the Fed some leeway to cut. And of course, as many of you know, on the employment side, we are seeing unemployment tick up. We're seeing it at a 4.6%, which is the highest it's been since like 2021. So the unemployment rate is definitely giving the Fed kind of a nudge to cut. However, inflation is still somewhat elevated. Preferably, we'd see inflation coming down so the Fed can then cut rates to try to help out the labor market. But the Fed is definitely in a tight spot right now. And looking at our next Fed meeting, we're very unlikely to see a rate cut. We're going to have to wait until future meetings, maybe depending on the data, of course, if we see unemployment continue to tick up while inflation comes down, preferably. This would give the Fed some room to cut and would definitely change these odds. Looking at March, we're like a 44% chance of a cut, 50% chance of no cut. You basically have to start going into like late spring to summer to start seeing a higher likelihood of cuts. But let me know how you guys are feeling about the market lately. How are you feeling about Bitcoin? Do you think we're entering a bear market like we've seen every crypto winter? This would typically be the timeline for it. Or do you think this time things are kind of different because of all this institutional attention, because of the spot ETFs? Maybe things prop Bitcoin up a little more. No matter what we get in 2026, it'll be the prime time to add Bitcoin, to accumulate Bitcoin. But thanks as always for watching, guys. Have a happy new year, and I'll see you tomorrow.